So we'll start with the panel discussion. The subject for this would be Aspirations Unlimited. A fairly abstract topic, but I think depending on the diverse panel that we have today, all of us have our own definitions of how we define aspirations and how we look at aspiration, not just for ourselves, but for the markets that we are catering to. How would you, define aspiration for yourself, seeing that you've started out in Chandigarh for your first startup, and then the second venture, you took it to tier 2, tier 3 cities, targeting auto rickshaw drivers. So what is it that you define as aspiration for yourself and for the segment that you're looking at?
So yeah, honestly, aspiration is pretty much, just having the maximum impact that we can have. But at the same time, you can't really, achieve that aspiration if you don't make some intelligent choices in the very beginning. So in our case, those choices were, differentiating ourselves in terms of where we operate and how we operate. So, staying in a tier 2 city like Chandigarh was one of them. And also we focused on our markets also to be only tier 2 cities of the country. So our aspiration has always been to be a very big on-demand player in the country. But the path that we chose was that let's look at what is the valuable piece of business that nobody's really going after and just capture that. And then we'll see from there. And that has gone really well for us since till now, and seems we're on the right track.
Right, so it was also a conscious call, right? Because it helped you stay under the radar, steer clear of some of the bigger players.
Yeah, honestly, the reason was my wife was from Chandigarh, so that was the call. But then you find reasons to justify it, and but in the hindsight, I think it's a very good competitive edge in some ways, because we have been able to one, stay under the radar. Talent pool also, people have this misconception that is not there in tier 2 cities, but actually if you go to Bangalore's and Delhi's, there's so many people who are from Chandigarh and around, or pretty much any tier 2 city, I'm guessing, who want to come back there, be with their family, have a chilled out life. And because of that, we have this huge edge, and retention is very high. So from that perspective, if there is a negative, there's generally a positive attached to that aspect also. And that has really helped us.
So first, I would say it's a privilege for me to be on this panel, and I think somewhere it mirrors the Aspirations Unlimited to see the next generation of businesses. So I run the think tank called Yes Institute, which is part of Yes Bank, which was also an entrepreneurial venture, as you may know, about 12 years ago. So the objective of the institute as part of one of India's private sector banks is how does the private capital play a role in the country's development? So we are very focused on the category we would call social entrepreneurs. That means basically we are focused that the basic standards of living for every citizen in India should be enhanced. And how does entrepreneurship play a role? So the Aspirations Unlimited is that we have this basic standard of living provided for every citizen. And again, as the private capital, we're looking at ways to do it. So just a couple of ways. We're planning to be sort of the go-to hub for social entrepreneurs. You might call it bottom of the pyramid, impact, etc. So we are getting together people. So this is just innovation on services, on health, education, housing. What does a person need? They need food, shelter, education, housing, and so on, and water. So we're doing that. We've been the go-to person. We've launched a program called Yes Head Startup, where we are supporting entrepreneurs largely through a set of partnerships. Of course, the bank financing, as you said, is a later stage financing in the ecosystem, but we've partnered with the Indian Angels Network to get equity in there with the Office for Co-working Space, T-Hub, and so on with the VC Circle. So creating an ecosystem in terms of a bank, that's generally a step that a bank does. Then we look at this approach on solutions revolution. So what government can't provide, can social entrepreneurs or entrepreneurs provide? So we're going to be doing something called the DICE Challenge. So DICE for us stands for Design, Innovation, Creativity, Entrepreneurship. So this again for us is that Aspirations Unlimited, this, the way the generation coming up is thinking differently with the DICE. And lastly, we're focusing on the innovative financing instruments. So we launched convening on the social impact bond. We're going to try to be the first to market with it. It's a way of getting private investors, again, into a service, where there's an outcome, where outcome players can then pay for that service. So these are some few ideas. Happy to go into more depth, but again,
so that's the starter way, right? Engage with the consumer and then upsell your services to them. What is aspiration to you when it comes to your business, creating content?
Yeah, so I was in advertising for about 4 or 5 years as a copywriter. And one of the reasons why we sort of started Scoopwhoop was because we were bored of advertising. So I like to call myself an accidental entrepreneur, because when we started Scoopwhoop, we didn't start it because we wanted to solve a problem or we wanted to create better content. It was just about 5 guys trying to have fun with content. So there was no aspiration to be an entrepreneur or to build a business or to start a company. I think it just happened. One thing led to the other. Some of the stories went viral. And we were able to make a decent business out of it. But when I look at aspiration, I think today we aspire to build a profitable media company. And I think that is very important, because I think a lot of people can define their companies in 1 or 2 lines, which they call is the vision of the company. For us, I think as long as we're building a sustainable media business, I think there's a lot of things that we can do and change the segment in itself. So I think the aspiration is to be better than you were yesterday. I think we wake up every morning and I think the only thing I ask myself is, can I be better than I was yesterday? And that to me is the aspiration to be a better Sattvik every day and to be a better Scoopwhoop founder every day. You
have that classic, entrepreneurial story coming from a small town, building a global business, bootstrapped the entire way, not running after venture capital, ended up being profitable as well. So how has that journey been for you, having those aspirations for your own and then ending up getting a lot of content and traffic from outside India?
I come from a very small place in Haryana. There are hardly 50, 70 odd houses in my village. Defining aspiration for me, I think, aspirations has been defined on every stage of my life and based on where I was and where I wanted to be. So when I was in village, my aspiration was to get to a town and, see the life out there. And when I was in a town, the aspiration was to be, something bigger and create an impact in life. And then when I happened to do a startup somewhere, the idea was to, again, to actually live up to the aspiration of creating an impact. Now, running a media company, I think I agree with what Sattvik just said, that, there are hardly media companies out there which are sustainable and profitable. The first aspiration was to create a sustainable and a profitable media company. I think we have done that one part at least. Now the only one word that I would like to add to that is, now the aspiration is to build a global media company which is sustainable and profitable from India. I think that's what I live for whenever I wake up in the morning. That's the idea, to make it bigger, better, and create a global business out of India, and probably break a myth around that.
I also wanted to get your opinions on, a lot of initiatives run by the government around making India a single unified economy, GST, Aadhaar, Digital India, connecting the tier 2, tier 3 cities, the entire long tail of consumerism is there. The demographic dividend is being unlocked. We are the fastest growing economy. There is aspiration and demand. So the end state is a utopian India, but as entrepreneurs and as financial institutions, we are right now going through a flux, right? There's a lot of uncertainty and volatility around day-to-day operations and decisions that we need to make. So how do you deal with that? And so just some thoughts on that.
So yeah, for us, I think, honestly, uncertainty is something that we learn to live with, right? I mean, competition is Uber, Ola, so, we just get to have a strong heart. But at the same time, I think this is a still, pretty big impact. Like the things that are happening in India right now, demonetization, our Prime Minister talking about entrepreneurship, are very, very encouraging, number one. At the same time, there are short-term issues that happen, like for example, the auto rickshaw drivers, they're generally hand-to-mouth people, right? So what can we do about, with them? So luckily for us, we already were pushing things, that towards digital India, because it makes life easier for us, and it just kind of accelerated that. But yes, there were short-term issues happening, which we were just, being proactive about it, try to deal with them. And I think what happened is pretty much all of the country just understood it so well, because normally what I've seen is that we as Indians like to crib a lot, right? Anything happens, good or bad, we just find something to crib about. But this is one thing where majority of people, right, were about, no, this is a positive thing, we need to bear the pain. And I think that is very, very positive change that is coming, and that's coming from our Prime Minister and from the very top. And that's very good for us to see as an entrepreneur. It seems that things will actually be very, very positive in this country for the next 5 to 10 years.
So in terms of Yes Bank, I was indicating earlier, we are about 975 branches right now. I mean, this is again a 12-year story. We aim to be around 2,500 branches. So actually really spread out, and we are in every state, right? So we hope our branches will be hubs through which we can reach out to entrepreneurs that then can connect to the major programs that we have, as I mentioned, the Yes Head startup, but that reach and our commitment to development. So I think that branch network is something we are looking forward to. We're about 19,000 employees. And then on the digital banking, we also focus highly on that. We have a new product on the current situation called SIM Se Pay. And that's like a sliver that you attach to your SIM card in the non-smartphones, and you're able to do payments through the non-smartphones too. So I think that's important for, again, the outreach that is needed. And then we were proud in the recent Mann Ki Baat, Yes Bank was mentioned about 6 times by Prime Minister. So we're doing a lot of work on the digital. It remains one of our forefronts for us. So hopefully we'll collaborate with some of the people here. Of course, we're also going to launch a fintech accelerator shortly. So if any fintech.
I won't comment on the political and the policies of the government, but I think anything that you say about India, the opposite is also true. And I think that same applies to any business that you're trying to build or any company that you're trying to build. So today, for example, the biggest challenge for a Scoopwhoop is to reach to a tier 2 and tier 3 audience. We know that 60% of the total traffic that we get comes from the top 5 cities. How do we get to a tier 2 and tier 3 town? And that for us is the biggest challenge currently. If things like digital payment, if in general the lifestyle of the tier 2 and tier 3 town improves, I think that's great for all businesses, whether it's media, whether it's e-commerce, or whether it's tech.
I think as a country, we are going through very interesting times. There's a lot of technology being talked about from the governments, which I think is a first. A prime minister taking up stage and talking about entrepreneurships and promoting it like as if he was running a business, not a country. I think that again is very fresh from government perspective, and that is going to lead to a lot of good things. It is always leading to a lot of good things. I come from a tier 2 city. I'm building a business there, and I go out and speak in colleges and all. And when you speak there is a clear sense why they are calling an entrepreneur to speak, which they wouldn't 3 years ago or 4 years ago. A startup guy, somebody like me, is not really super rich and corporate guy, because that's the kind of environment that is being built right now all across. Maybe that is government, maybe that is media, but that's how it is being built. So things are changing for sure. This GST and demonetization and Digital India and Make in India, all of this I think are very well connected with each other, and all are going to lead to good things. Growth definitely is in tier 2 cities for any business, not just for companies like Scoopwhoop or Wittyfeed, media companies. I think tier 2 cities are where the actual reader lies. We launched our Hindi version of the website 3 months ago, and now out of the 35% traffic of total that we have from India, 75% is on Hindi website, which is coming from tier 2 cities. All of it is coming from tier 2 cities. Hardly anybody reads Hindi in tier 1 cities, right? It's not that cool. But 75% of the Indian traffic that we have comes from tier 2 cities, which is where we believe, I think, is tremendous growth with geo and with digital and all these moves. I think the internet is penetrating faster than ever, and we are going to have a lot of growth there.
A lot of that euphoria, I think, at least a year back, was overrated in the short term, right? Because a lot of this pent-up demand and large markets in tier 2, tier 3 cities, a lot of startups expanded into those markets, and they realized that in the short term, the markets are not ready yet for them, and they roll back their expansion plans. So are you also facing some of those problems, or are we seeing that because of these government-related policies and changes, that euphoria might just do a repeat of itself?
The euphoria of rolling out into tier 2 cities? Or
yeah, the pent-up demand that is there, but in the short term, we might over-expect that demand. It may be there in the long run, but in the short term, we may think it's not that much.
I don't think there is a need to roll back now. I'll explain it with a small example. I was in my village almost a month ago, and so I went to a nearby town, and so somebody was telling me actually that the Flipkart has started to deliver in my town, which means there's a buyer in that town from Flipkart now, and so Flipkart is going to advertise and target that user, which is not even a tier 2 city, it is a village that I'm talking about. So there is demand, so there is going to be spending, so people like me and Sattvik are going to be very happy about it.
I also feel that, in tier 1 cities and urban cities, you can build a cute business. I think to build a large business, you have to go to tier 2 and tier 3 towns. And you look at any industry, right from FMCG to digital to services. That's where the audience is, right? I mean, if 70% of the people, and my statistics could be way off, but I do believe that a large number of people live in tier 2 and tier 3 towns. And if you build a business that caters to them, then only then you'll be able to build a large business. I think tier 1 and urban centers are very good to get a proof of concept. But if you want to build a successful company, and if you want to, more importantly, if you want to drive change through what you're doing, it's imperative that you reach out to the audience. You reach out to a girl in Surat, you reach out to a boy in Bhopal.
So obviously, these guys don't have to put offices and teams in tier 2 cities. So, it's easy for them to say don't roll out.
That's true.
But when we have to, spend money, I think it's not easy to run tier 2 cities because the expenses are very, are obviously linear. And the frequency of use in tier 2 cities is not there yet. So I think there are two ways to look at it. One is to wait it out. And second is to actually try to capture the long tail. So our approach is to try and do more things for a smaller frequency user base and hope that the frequency increases and we are actually able to capture more than one items, right? So I think it's a long-term approach. But even if you look at tier 1 cities, it's a long-term approach because everybody is losing money on CAC. So in tier 2, you don't burn money on CAC, but you burn dead cost on keeping the infrastructure ready. So pretty much every startup in the country today is waiting for Indian economy to grow, the disposable income to grow, and then they will make money. If India doesn't grow, we are all, sort of doomed. So there's nothing to be made then. But if India grows, then I think the approach is different. In tier 1, there's CAC burning. In tier 2, there's operational money burning. They'll both be successful, but in different ways. And approaches will have to be different.
Right, and the product market fit also is different, right? The same product may not fit in a tier 1 city or a metro versus a tier 2 or a tier 3 city.
Yes, definitely. And I think that's the biggest moat, right? That's the biggest defense. So why do we think that, these big players will not be able to come to tier 2 cities? Because the dynamics of the way the product is being used completely changes from a tier 2 to a tier 1 city. So if you think about, let's say, I'll give you a small example. You do food delivery in Gurgaon, right? There are high rises. So the average distance a person has to travel, like a delivery boy has to travel for a delivery is very low because in one building, typically there are 10 orders to be delivered. But you go to a tier 2 city, there are no high rises. So the average distance actually increases. You would expect the opposite to happen. So there are these dynamics that change, and how do you make the unit economics work? And because the purchasing power decreases, So how do you get the unit economics to work is a challenge. And the person who cracks it is going to win a huge market. And also, like, if you look at analogy, right? Walmart, world's biggest retailer, I mean, biggest or second biggest, I don't know the latest numbers, is actually a tier 2 phenomena. It's not a tier 1 company. So from that perspective, most of the business, I think, is not going to be in tier 1. And tier 2 has a lot to offer to entrepreneurs.
I think the real test for any business lies when they move to tier 2 city, because see, the adaptability, the awareness of product, the technology, the concept, the acceptance, all of these are of a different level than when you compare it with a metro city, right? So even for a Jugnoo or for a Scoopwhoop or Wittyfeed, when we reach out to a tier 2 city guy, you know, the way we have to approach them is very different. As Samar pointed out, you know, the dynamics is very, very different, right? The kind of, for example, to us, we have to create a very different kind of content to cater to them than we create for the tier 1 country, the tier 1 cities, right? So as Sattvik said, you know, you can build a cute business in metros, but you know, the real business, the larger side of it, the bigger side of it, and size that really matters is actually in tier 2 cities, and it's a big challenge, but those who face it and go through it and win it are the ones who actually end up creating much larger businesses out there.
I think it's an execution problem when you move to different cities, cultures, and landscape, right? I'll give you content as an example, right? So anyone and I would say that, for example, Game of Thrones, if you take it as an example, anyone in urban centers in India would be a fan of the show. But you drive, so I'll take Delhi as an example, right? My office is in Vasant Kunj. So Vasant Kunj, if you look at it, everyone's a fan of Game of Thrones or Narcos or one of the shows that Netflix does. But you drive 1 hour in the opposite direction of Delhi and the pop culture references completely change. They never heard of Game of Thrones, for example. So how do you reach out to that guy versus a guy in Vasant Kunj? So I think it's an execution challenge and a problem that a lot of companies need to overcome, rather than a product fit.
Right. And Preeti, so at Yes Bank, you are solving some of those development-related problems. At the same time, you also have to make money and build a sustainable business for yourself. So how do you do that fine balance?
The point I wanted to make is, you know, the focus on quality. So one of our, the key bottom line is we want to be the finest quality bank of the world in India. So I think whether you're in the tier 1 or tier 2 city, I think the quality of your product should not differ. At least you should aim to provide that high level of quality across. And I think the demand, will be there when people see quality. I think that's a clear differentiator. I do feel, of course, there is huge income inequality in India. So the moment we are able to decrease that, and I think digital payments, etc., getting people into the formalized sector. So one statistics is that we have 500 million people in our labor force, of which 80% are in the informal sector. So with the informal sector, the cost, the revenue per person can be lower. I mean, it's an informal, exchange of money for services. So the other theory we have is the economic theory of cluster development. Again, if you cluster economic, situations, then more of the formal economy develops around that. So, for instance, the institute has a very unique way of looking at culture for the country, because that culture or crafts in India is a part of our economic advantage. I mean, it's very unique. So apparently the government has identified 744 craft clusters. So my point is, versus, any craft festival you go, textiles, etc., with the cash, you can only make a 2,000, 3,000 rupee purchase, and some of this beautiful work that's there. So what we're trying to do is distribute these point-of-sale machines to craftspeople or clusters of craftspeople. That will, we feel, enable the revenue generation to increase. So I think some of these mechanisms, the quality, the cluster, the formalization would help, bring some of that income inequality down.